Okay, perfect. So, welcome. I am going to teach you the ABCs of the stock market. My name is Dr. Khalil, and a backstory about me is that I started investing 10 plus years ago when I came to the United States. And I was a physician, and people were wondering, how do you do all of this? And I was like, I want to take part in the biggest economies of the world. And so I started getting interest, and colleagues started asking me, can you teach us? And I started teaching them. Ultimately, people started to pay me to teach them. And the reason why I do this is because over the past 10 years, I have noticed that the biggest hurdle people have is that they don't understand the terminology of the stock market. It pushes them out. And so they think they need a degree, they need a financial planner, and you don't need anything. It's just something like anything. You self-educate, you go under the wing of somebody who knows, and then you just start. And so without a further ado, I am gonna start. Where is my next slide? And so this is a jam-packed session. This is not going to be covering every single thing in the stock market, but it's going to really jumpstart you to do better and know more terms than you ever did. And so this is our disclaimer. I'm going to start with the istiada. A'udhu billahi minash shaitanir rajim. Bismillahir rahmanir rahim. And the disclaimer is that this is an educational purposes video and we don't have a client relationship, and all the materials are trademarked. And so something interesting that I want to tell you about before I begin with the ABC is that I created this resource for a single mother who was my client, and she wanted to educate her son who was a teenager. And so we came up with this idea. So these files are actually being used from a real client. And so it's really interesting. I made this for her and she loved it. And I was like, why shouldn't I share it with other people? And so let's begin. B is for brokerage. What is a brokerage? A brokerage is a firm or a middleman who connects buyers and sellers. It's like a bank, but in a bank, you place your money and you cannot trade it. In a brokerage, an example is Vanguard, Charles Schwab, Fidelity. You must have heard of these. They act like a middleman. So the companies bring their shares to the brokerage, and we, the investors, can buy and sell those shares in that company. And so basically, they're just a middleman. They just provide us a platform where we can do these trades. Next is bond. Bonds are basically an agreement between a lender and an issuer. So it's normally a company or it's the government. And what they do is when you buy bonds from them for a fixed price, they fix an interest. Bonds are generally not considered Islamically permissible, but we still need to educate ourselves. Why is it not Islamically permissible? Because bonds have a fixed interest on them regardless of how that company or whatever your money is being used for. It could be in profit, it could be in a loss. The bond is going to pay you an interest. And that's why it's not permissible in Islam, because Islam does not, it's manipulation kind of. So this is one of the reasons it's not permissible, but you should still know what is a bond and it's available to trade, and people do buy and sell it because it has a fixed interest, and so it lowers your risk. Number 3 is correction. C is for correction. So a correction is a 10% decline or more in a stock and from its recent peak. So for example, a stock or a share of Amazon went from 100 to $120. It peaked, right? And then a 10% correction for a $120 stock would be $12. So when it comes down back to $12, the reason why it does a correction is because sometimes a stock goes up and it's false because a lot of people buy that stock. And so the price of the stock falsely grows. So this is a good thing. A correction automatically brings the price of the stock where it should be, and not it brings it down from the peak from where it is falsely goes up because of the interest in the market. So this is a really important tool in the stock market. Next is dollar cost averaging. This is my favorite tool. So what happens is that every day in the stock market, the price of a company or the price of a share of a company goes up and down, right? And so a normal person, I am a day trader, I can day trade, but not everybody is literate or has the skills to day trade or has the time to sit and day trade. And so dollar cost averaging is, for example, if one of you decides that on the first of every month, I'm going to buy a stock in Amazon or in Costco. So on the first of every month, the stock price is going to be different. And so what happens is sometime you might buy a stock at a higher price. Some months you might buy a stock price at a lower price. And what it does, it over time, if you continue to invest in the stock market, it will average out, which means you are never going to be buying a stock which is very expensive or which is very low. So it automatically helps you clean up or averages your stock value, which is a really valuable tool. What are dividends? Dividend is a sum of money that is paid regularly, usually quarterly, by a company to its shareholders. So what's going to happen if you buy if you and they are not necessarily going to provide you with a dividend. What happens is you buy a share or a part of a stock, right? And that company could be Apple, Amazon, Tesla, thousands of companies that are traded on the stock market. They're going to pay you a couple of cents every quarter. They do this, they use it to keep you in their share so that you keep buying their shares or you keep holding on to their shares and you don't sell their shares. It's not necessarily an indication of how well a company is doing. It's just their small hook to keep you hooked. So many of my clients are confused that this company is paying us a lot of dividends, we should be in it. That it doesn't say anything. They just don't want you to lose their stock, and they are usually big companies. What is an exchange trade fund, an ETF? An ETF is actively traded throughout the day. So they're like index funds, and we're going to get to what are index funds. ETF is actually an index fund or a mutual fund that you can trade like a stock, and the price goes up and down. But unlike a mutual fund, you can buy an exchange trade fund for a very small price. Index funds are mutual funds that, number one, you cannot buy them they have a minimum. You have to invest a minimum in that company to buy that fund. But that is not true for ETFs. And mutual funds can be traded once a day. ETFs can be traded anytime throughout the day. What is next? Equities. Equities represent the value that would be returned to you as a company shareholder if all the assets were sold and the company debts were paid off. So remember, an equity is what do you get if, because all companies in the United States have, what do you say, they have debt, right? And so what equity is, if that company were to say that we're going bankrupt and they say sell all of their shares, what is the part of the share that is going to come to you back if they sold all of their shares and they were paid off all of their debt? That is an equity. And so this is the measure that you should be looking at when you buy a stock. What is what is the equity? What is the real value of the company? How much debt do they have? Because God forbid, if they were to go into bankruptcy, how much money can you recover? Okay. And so we are going to take a small break after index funds so that we can, absorb all this information I'm telling you. It's 8:11, so we're doing good. What is an index fund? An index fund is an investment fund that follows an index. So these are the index fund is actually a tracker, right? So for example, there are three big index funds that you've heard about. It's called NASDAQ, S&P 500, and the Dow Jones. So what are these doing? It's very simple. They are companies that are tracking quite a number of companies. So they're a tracker. So the S&P 500 tracks the top 500 companies in the stock market. The NASDAQ tracks basically the technology-based companies, and the Dow Jones tracks 30 multiple sectors companies, but there are just 30 of them. So S&P 500 is the biggest. Index funds are basically funds that are tracking those S&P 500s and the NASDAQ and the Dow Jones. So you cannot trade an index funds, but you can buy mutual funds, which are actually a mirror image of how those 500 companies are doing. And the reason why I love index funds is because it's not like placing all of your eggs in one basket. An index fund diversifies your portfolio. So what happens is that you end up spending couple of cents in those 500 companies. So for example, you buy an index fund for S&P 500, you're actually investing your $100 in 500 companies. And what does that do for you? Well, it's good, right? Instead of investing $500 or $100 in one company and it could go bankrupt, you have invested and they have distributed those funds in 500 companies, which means that if one goes down, you shouldn't care because you have 499 companies. So this is why index funds are the best funds. And I will show you, if you continue working with me and if you come on board, I will show you how index funds over the long term can make and create generational wealth. Warren Buffett, the richest man in the United States, is a big proponent of index funds. And so this is a game of patience. And unlike day trading, where there's a risk that the fund is going up and down and your heart is going up and down with the fund, an index fund, you buy it, you let it do its job. Every year it gives you a return of 10%. And that is how many American families create generational fund. This is the thing. Look for index funds. So now let's just take us. We already did, I think we did the exchange trade funds, right? Let's go move forward. What is a health savings? Just an announcement. I am going to have a webinar on health savings account. This is such a deceptive title that the IRS has kept off for this account. The health savings account is a retirement account which can be used to make qualified medical expenses, but it grows. But this is the only account which has triple tax benefit that you should know about it. Why am I so passionate about this account? We live in multi-generational families. We live with in-laws, we live with our parents, and they have medical bills. I mean, we are getting old. We are going to get medical bills too. So for our sake, do you know that you can pay your dependents, not just your kids, your in-laws medical bills and your parents medical bills, and you can actually save enough money when you're 65. This is the only account you can take money out of and spend on anything tax free. So it's deceptive. It says a health savings account. It looks like it can be only spent on health savings, but it has a catch to it. And the catch is that if you have money, number one, it rolls over. And if you live past 65, inshallah, you can just take out that money and use it for anything. So you basically, it has three tax advantages. So this is an important topic that I'm going to be doing tomorrow. And I think I had some resources to give to you, but I guess I talk about it later. But yeah, join me tomorrow and I will tell you why in especially Muslim families who live in multi-generational families, this is a gold mine that we're sitting on and nobody talks about it. I mean, it's outrageous. And how I know about this, remember, I'm a physician as well, and I have saved thousands of dollars on my in-laws. Like my father-in-law had cancer, we had to pay money, and I asked my husband to open this account. We ended up saving thousands of dollars, and a health scare can happen to anyone. So stay tuned for tomorrow. We will discuss this more in depth, okay? So what is next? An IRA. An IRA is an independent or an individual retirement account. And there are two types of our IRAs. People are familiar with them. They have limits. So there's a traditional IRA and there is a Roth IRA. And these both accounts have a $6,000 limit for this year, but it is going to change for next year. It's going to be, I think, $6,500. What these accounts are, they're tax deductible. So basically, one of the accounts is pre-tax, which means before you pay any taxes, you can decrease your taxable income. That is called the traditional IRA. You can use that tax account to reduce your taxable income and save on your tax bill. Because if you earn 100,000, the traditional IRA can help you reduce it to 94,000. And so now you're in a completely different tax bracket. And so people who are extremely wealthy and make a lot of money, traditional IRA suits them so that they can decrease their taxable income. What is a Roth IRA? A Roth IRA is an account in which you put money when your taxes are done. So whatever your savings are, you put money in it. It grows 10% every year. And so what that is going to do for you, when you take that money out from the Roth IRA, which was already taxed, you're going to take it out tax free. And you can pay your first house up to $10,000 from these accounts. And also you can pay for a death or an emergency. So this is also a really good account. And people who work, ladies, know about these. Next, what is a Dow Jones? I already spoke about Dow Jones is an index fund. Basically, it's an index that tracks 30 companies in different sectors and how they're doing. What is a bear and a bull market? So right now we are in we they thought we were going to be in a bear market. Bear market is when the stock market grows to no, a bear market is when a stock market drops 20%, okay? And a bull market is when the stock market jumps 20%. What happens is that this is created by fear, political turmoil, like COVID. In COVID, we had a bear market where the market dropped 20%. And so these factors, the reason why people, the fear that is created affects the it affects the market. And what happens is that people who don't know the history of the market, that the market balances and averages out at 10% every year, what they do is they pull out their stocks and they lose all their money. Whereas if you have a plan, if you speak to somebody like me who can guide you through, this is the history of the stock market, there you are going to be able to get over this, and it doesn't matter, the market averages itself out. So that's pretty much it about the bear and the bull market. Let's go to mutual funds. We already discussed what are mutual funds. Mutual funds are funds, they're index funds that you can buy. They are not a single stock, they are many in one stock. So they could be the whole market, they could track the international market. And I honestly tell you, read on mutual funds, read on index funds. This is how people get rich. If you don't want to day trade, these are the accounts you need to look towards: index funds and mutual funds. This is going to make you rich. This is what has made majority Americans have been made rich because of this, including Warren Buffett, who is the richest man in the world, says that every American should be investing in mutual funds because it decreases your risk. It's not like day trading. You will not have to follow it every day. What is Nasdaq? Nasdaq is another Nasdaq primarily follows the technology companies. So all the technology companies primarily are followed by the Nasdaq. So if it goes up, the technology sector is going up. If it goes down, the technology sector is going down. What is a P/E ratio? P/E ratio actually shows what the market is willing to pay today for a stock based on its past or future earnings. So a high P/E means that the stock price is relatively high to what it has actually earned. So basically, it is over evaluating the price of the stock. A low P/E means that they have their earnings and their stock price are same. So look for stocks that have a low P/E ratio, because that means that the stock is actually priced equal to what its value is. If you are looking for a stock and it has a high P/E ratio, that means they're over evaluating, they have inflated the price of the stock, and they're not earning as much. So these are indices that you need to look into when you are day trading, or when you're buying stocks. What is recession? Nobody's favorite word. A recession is when in 2 consecutive quarters, the economy, the GDP, which is the gross domestic product, which in simple layman's terms mean that what your country has produced in terms of economics, in terms of value in the past 2 quarters. If it is less, if it goes down 2 quarters, there's a recession, which means the country's economy has not done enough, or has not produced enough money, has not created enough jobs. That's what is a recession. And they say we are near a recession, but I don't think that's true. What is the S&P 500? The very popular S&P 500 is an index fund that tracks the top 500 companies of the stock market. And so remember, this is a fund, this is a tracker. You cannot buy and sell the S&P 500. It is tracking the top 500 companies of the stock market. What you can do is buy a mutual fund or an ETF, which is a mirror image. It is actually a fund that is following the S&P 500, that follows the 500 companies, but that's an actual fund that you can trade. And so again and again, I'm telling you that is the way to go. Mutual funds and index funds are the way to go. That is how people create generational wealth. What is a trade? It's very simple. You buy a stock, you sell a stock. That's called a trade in the stock market. There, when you go open an account, it says trade. It simply means, do you want to buy a stock? Do you want to sell a stock? Do you want to buy an index fund? Do you want to sell an index fund? That's very simple. It doesn't mean anything more. Next, what does volatility mean? Volatility means, excuse me, how the stock market is performing. So basically, it's an average. The stock market, every stock price has an average, right? You can average the stock price over time. The volatility means that if the market is going sharply up and sharply down, that means the market is volatile. It's not a stable market. If the average price for an Apple stock is $100, I'm just giving you an example. And if one day it goes to 102, the next day it comes to 99, there is no volatility. But if one day it goes down $70 from $100 and the next day it jumps up to 90 and then it goes down back to 60, that means the market is really volatile. What is a watch list? A watch list is simply you create a list of stocks that you want to watch over a period. That is what I do because I day trade as well. Sometimes, for example, the Costco stock and the Adobe stock, these are the two stocks that I am watching every day. And what I do is when the stock goes up, I sell it. When the stock falls, I buy it. And so this is how I can have I get money every day. So honestly, I made $1,500 last week just trading Costco and Adobe. Okay. And so this is a watch list is really, really good. But an experienced trader will tell you you just need to look at 2 or 3 stocks maximum. Most people only trade 1 or 2, but because I don't have a lot of money in the stock market, I tend to sometimes jump the gun and trade 2 or 3 stocks. What is next? This is the last slide. Thank you so much for your time. I hope I justified our 30 minutes. We still have 3 minutes left. Do you have any questions? This is my email address. If you decide that you want to consult with me or if you want to ask any questions, please ask me. This is my much honor. I grew up in Pakistan. My mother was very penny pinching. And so me teaching this is a big thing. I wish she was alive to see it. This is the whole thing. And so tomorrow we will be having a session on HSA, and it's very important. I would love for you to attend it. Again, this is the offer. I offer a 90-minute consultation. Nobody does it like me. And I'm not saying this to be proud. I'm saying this because the financial planners are really expensive and our especially our Muslim community needs a lot of financial help. We have the money, we just don't know that this money can actually give a head start to our kids and they can retire as millionaires. They don't have to live like us. And we can save them from the 9 to 5 hustle. Imagine if they had a head start, they would do much better. And we would sleep better knowing that they have the financial education and they can make the right decisions. And we have taught them well enough and they have enough money to invest. So because the money in the bank depreciates. So if you are interested, please email me. Mubin said where I am. I am in Maryland, Mubin. But the consultation is on over Zoom. So it's a 90-minute consultation. The reason why I do it is because it's just convenient. It's professional. I've been doing this for the past 10 years. And so get in touch. I want to do a session with you tomorrow because honestly, I really want to educate you. And so this is the session for tomorrow. If you liked what I taught you, you will really love this. Why? Because we live in multi-generational families. And so it would be really beneficial for all of you to attend this. This is the session for tomorrow. If I'm going to send you, if you want to attend, you can click on it and register. And so, yeah, this is it. I'm going to also send you my page if you want to see what I do, look at the things that I offer. And that's pretty much it, Let me know if anybody has any other questions or it's 8:30. We can end the session.